get your thoughts on the session today.
James, look, as you mentioned, a positive finish in the end. It was a fairly choppy day, but we did actually manage to close on the highs of the day, despite actually starting off lower this morning following those negative leads that we had coming from particularly the US. Obviously, we saw some strong corporate earnings coming through there. The Fed are continuing to remain patient in terms of those interest rate rises, but obviously we did see their energy sector under significant pressure in response to those falling oil prices, and that certainly translated across onto our market today. Of course, some of those concerns continuing to come out of Greece as well in terms of those debt problems, all adding to a bit of concern in terms of the global outlook. But looking at those best performers today, as you mentioned, utilities, of course, financials and materials. We saw all of the major banks up except Westpac. We did see them announcing that they will be selling some of their operations over in the Pacific Islands. But of course, looking at that materials sector, we saw iron ore down overnight, but we actually saw the likes of Atlas Iron, BC Iron, BHP, Rio, and as you mentioned, Fortescue, all performing very strongly. We also did see some of those copper stocks, some of the leaders, but unfortunately those gold stocks continue to drag in response to those falling gold prices. The worst performing sector, as I mentioned, being energy, down another 1.6%. Not seeing the same falls as we did see in the US. Those stocks as a group were down about 3.9%, but nonetheless still seeing those oil prices under a bit of pressure. Volumes today were very strong, about $4.5 billion went through, but as I mentioned, a very strong day today, seeing that positive turnaround, a similar performance to what we saw yesterday, closing up about 0.3%.
Fortescue Metals coming out with their quarterly report, and certainly the market seemed to like it, closed up near 10%.
James, it certainly was the best performer on the market today, and obviously a very strong report that came through. Certainly saw investors responding very well to that. We did see obviously their production and their shipments remaining consistent at that 160 million tonnes per annum, and that's following the huge ramp up recently. Their costs in particular were down 11%, which was very pleasing, and that was obviously in response to that lower Aussie dollar and obviously those lower fuel prices. Their realised prices were actually in line with our expectations, and obviously saw them repaying that $500 million in debt, and their cash on hand still remains very strong. So I think their balance sheet is still in a good position, maintaining their FY15 guidance and obviously reducing their cost guidance as well going forward. So I think there are a number of positives there. Potentially the positive result that's come through could potentially be a bit of a turnaround, I think, maybe for the share price, given obviously the downtrend that we've been seeing over the last 12 months. Fortescue was down about 53% over 2014, down another 20% or so this year. So it really has been under significant pressure, obviously in response to those falling iron ore prices. So I think going forward, certainly their earnings do remain at risk as we do start to see some of those iron ore prices moderating. But I do think that they will continue to generate that positive cash flow and certainly do remain in quite a strong position in terms of servicing that high debt level and paying out some of those dividends, and also certainly expecting some of those unit costs to continue declining. So we very much like the outlook for Fortescue, despite obviously those iron ore prices continuing to be a bit volatile, maybe coming under further pressure, but certainly a very positive report today, and saw that share price responding.
And